Welcome to Capitalizing Your Life, the podcast that shows you how to take control of your money, build lasting wealth, and create financial freedom using the infinite banking concept. If you're ready to make your cash flow work for you instead of someone else, you're in the right place. Here's your host, Glenn Yaney.
Today, my guest is Neil Dietrich with Ascendant Financial. Welcome, Neil.
Hey, Glenn, how are you?
Yeah, I'm excited to have you. And I love that there's a video you just put out, and that's how we got kind of introduced to each other. It's about practicing IBC and real estate, the two separate real estate investors, which I was like totally all in. I love the video. If you guys, anybody listening, you can look that up. It's Neil Dietrich. And what's the YouTube channel?
Yeah, so it's on the Banker's Vault, and I did it too with my colleague, him and I, Ron Esteban. We collaborated on that, and yeah, it was great to do one with Ron because Ron and I have been on this journey together pretty much since the beginning, and we both came to IBC sort of through being real estate investors. So we thought it's time to put something together.
Awesome. So if you could just tell us about your story and how you got to where you're at today.
Yeah, well, I became a client of Ascendant Financial in 2021. I think I started poking around in 2020, like, what we were all doing when the world shut down, right? You're online and so I came across it then and became a client probably about 6 months later in 2021. And I'm a lawyer by trade, right? So I went to law school and I practiced law for 16 years. And then in late 2023, my advisor at the time, he said, well, when are you going to come work for us? And I just I'm like, well, I've got this sort of law thing going on, right? Practicing law. And so those seeds were kind of planted in me. And another time, my brother-in-law, who I introduced to, the concept, and my sister, and my brother-in-law said, so when are you going to start being an advisor? Because I just loved it so much.
Yeah.
And it's one thing when the coach that you're talking to says something, sure, okay. But when you have family members that are pointing it out to you, that's when I kind of stood up and paid attention, I suppose. And I thought, well, maybe this is something I should explore. Like, I was really passionate about it. And so, long story short, I took a pause from practicing law, and I began with Ascendant in the spring of 2024. So it's been just a little over 2 years now. Hung up my law degree. I still have my law degree. I'm not practicing anymore. I've been practicing since, 2+ years now. And it's been a wild ride, Glenn. So just working with Jason Lowe and Richard Canfield and the crew here at Ascendant Financial. And lots of exciting things going on. Like, I can't believe what's happened in the last 2 years now that I'm sort of reflecting on it.
Yeah. And it's funny because, like, being a lawyer, I think I haven't met a lawyer that wasn't a little skeptical in almost everything. Like, they have some skepticism, like, all right, let's poke some holes through this. So if you could just tell us, like, okay, so generally I believe that there's some type of problem that happens in our life or that we've realized. What was the problem that you had that led you to, talking to Ascendant Financial and practicing IBC?
So this is a little bit more personal because it really wasn't a financial problem. I mean, we all have the problem, as Nelson describes it in the book, but that wasn't my focus. It was, I lost my dad in 2016, and that kind of set me on a path of just evaluating my life and evaluating, like, fulfillment in my job and my passions and what I like to pursue. And at that point, I had been practicing law for 8 or 9 years at that point. And so it kind of set me on a journey. And then about 4 years later, I came across this. And then a few years after that, I realized I am really passionate about this. And I do like to teach.
Yeah.
And people who know me know that I'm a very passionate guy. And so the problem was if I look at myself, or I see my future self, and I'm 65-year-old Neil, and I stayed in law and I kept practicing, would I look back at my career and say, you know what, I went for it? Like, I worked exclusively for the government, right? So I didn't have a firm. I wasn't an entrepreneur. I was that W-2, T4 employee, right? And so I was, 3 years ago, I was 42, right? So I didn't want to live with the regret of not betting on myself in that sense, right? And so that was the problem I had. It was this desire to become an entrepreneur and Glenn, I could have got out of the government and I could have hung out my own shingle as a lawyer and built a firm. I didn't want to do that. I wasn't passionate about the law and
Exactly.
serving my community and writing contracts and writing up wills. Those are all important things, don't get me wrong, but I wasn't passionate about it. And so I really found my passion in this concept and teaching this concept. And so my problem was about really fulfillment. And that was the problem that I was trying to solve in my life. Meanwhile, being able to help people solve the financial problem that Nelson talks about. So that was a career path. In terms of the personal path, how I first got into it was, like I said, I was a real estate investor. And, when you're an investor, you're always trying to find efficiencies.
Yes.
And when I came across this concept, of course, the mind is always trying to compare, right? So most investors, they'll think of, I've got this investment opportunity, or this investment opportunity, or this investment opportunity. And that's how my mind was working around this concept. And I didn't appreciate it for what it was, that it was more of a baseline warehouse of my wealth before I would, invest in real estate. So it was a way for me I didn't realize, because you don't know what you don't know, I didn't realize I wasn't optimizing the money I was putting into my real estate properties or the rents I was getting. I was just playing that banking game that most investors, and especially real estate investors, are playing. And so when I heard about this concept and I started looking into it, I said, I have not optimized my real estate portfolio. I need to do that. So that was more as a consumer client. That was the problem that I finally recognized I have, because as you know, most people don't recognize, they don't even see it as a problem, because they don't even conceptualize putting their money in the bank and then taking it out as a problem, like that they're not optimized there. We haven't been taught that there's actually another option. So
Yeah.
it's kind of like that red pill, blue pill moment, right?
Yeah, exactly. And I was just thinking, as you were talking, I was like really just letting you talk, just because I really felt like a lot of times people see, the typical, like, whatever, insurance or whatever the case be. It's like, my skepticism whenever I first got into learning about IBC is I always thought it was a tool to sell life insurance. And really, listening to your story is very similar to my story, just because you're in a business, being a lawyer, the monetary reward is, known to be high. It can be.
Yeah.
You can pivot, you can get a ton of experience in the government job, but those government pivots generally can get you a lot higher income.
Yep.
So if it was something about monetary reward, it wouldn't be life insurance sales. But I think what happened for you is what happened for me as well. I love it, because you're talking about your eyes were opened to something that has always, for me, has always been something that was kind of like, why would you put money in your whole life insurance or something like that? And once I understood like the value and how to structure a policy and the infinite banking, becoming your own banker, all this stuff that comes with it, it was like almost like I need to tell more people about this. This is very important and it's life-changing. Like my background is I interviewed over 100 syndicators on my podcast, and once I really understood becoming your own banker, like I'm in real estate, I'm in a place where I technically could grow a very large portfolio, which I do still plan on doing. But I felt after interviewing 100 real estate syndicators, I was thinking, I don't think giving people, finding syndicators where to put your capital is actually the best use for most people. Some people, high net worth, but when we get down to the problem, it turns into maybe there's a better way to do it. And that's kind of what I found through becoming your own banker and, practicing the infinite banking concept. And that's why I stopped also. I'm still in real estate, but at the same time, it's like, maybe I could teach somebody something that's really going to change their family dynamic for the rest of their life. And that's really kind of like how I related with your story. And then also I was thinking about being an attorney, you're taught to be strategic. I mean, there's, you're looking into docs, looking at worst case scenarios, finding the holes in all the problems. And I think that's like when you got into real estate, or you're in real estate already, and then you start going down the infinite banking trail. And now you've opened up yourself to the solution to a hole in your financial plan. That's for me also. I had a lot of problems as well, struggling through liquidity and realizing where the holes are. And I love, just because when you have somebody that has multiple backgrounds, like it's like you can just see through it and it stops becoming about sales and it becomes more about education. And that's really what I've been really focusing on, is just like, how do we become better educators instead of, it's not about like the life insurance sales. It's about empowering people to take ownership of their life.
Absolutely. Now, I'm glad you raised that because a lot of my colleagues that I work with here, these are second careers, I would say, for the overwhelming majority.
Yep.
And the overwhelming majority did not come from a financial background. We've got teachers and we've got engineers, we've got some entrepreneurs. We're initially based out of Alberta, so we have a lot of people that had, history in the oil and gas sector as well. I mean, Richard, he was in the trades.
Yeah.
So we come at this. I like to think that we're not these career people that walked into an agency when they were 22 and have been doing it for 3 years, right? And only know one way and, so on and so forth, right? So we've come to this as clients first. The overwhelming majority of the people who work at Ascendant Financial, they're clients first. And that's actually pretty much a prerequisite to getting hired.
Yeah.
And so we come at it with that lens. We don't come at it with, we're not trying to refurb, if I can put it that way, somebody who was in the traditional financial sector learning insurance. Well, this is, Peggy Sue, if Joe kicks the bucket, this is how much you're going to need. And this is, needs analysis are important, but that's not how we initially approach. That's not our area of expertise, if I can put it that way. We're all practitioners here, right? So, and we come at it from, a lawyer's lens, an engineer's lens, a teacher's lens, right? So I think that, I like to think of it as we're the everyman who turned into practitioners. That's what we are here.
Because of passion.
Right.
Passion. That's literally like what I was thinking. I was just like, if I wasn't passionate about it, there was no way I'd be doing this.
I kind of joke around and I say, if you tapped me on the shoulder 7 years ago and said, Neil, you're going to hang up your law degree and you're going to sell insurance one day.
Yeah.
I would have laughed in your face. Right?
Exactly.
But that's not what we're doing. That's how we get paid, but that's not what we're doing, as one of my colleagues would say.
Hey guys, if you'd like to learn more about the infinite banking concept and how to flow your capital through your own financing system, my team and I are here to help. With over 35 years of experience, we can guide you in building a properly structured whole life policy tailored to you and your family. See the scheduling link below. Now, back to the show. So let's talk about, I know that the thing about infinite banking is it's very simple. We try to make it complex because we're trying to find the problems. We're trying to poke holes through it and trying to figure out. But how would you say that, creating your own banking system and putting it towards like real estate or just everyday life, how do you practice doing that today?
Okay, so I'm going to tie it to real estate. And,
sure.
And so whenever I'm talking to a prospective client, I think Nelson beautifully named the concept the infinite banking concept.
Yes.
Because I'm sure you experience this, Glenn, and any other practitioner who's listening to this, they probably experience this too. You always get on those calls, well, how does it work? How does it work? And I always say to people, well, it's called the infinite banking concept. It can show up in a number of different ways depending on your circumstances. So let me understand your circumstances, right? So that's why because I always have to have an anchor when I'm explaining it, right? Because I can tell you about how it's great to get out of debt, but you're not in debt. Right. And so, for me, for my real estate, for example, I looked at it and I went, okay, well, I'm saving up the down payment. I'm transferring that permanently away from my family forever. I'm receiving an asset. So it's a trade, but that money is gone and it's left my family forever. Hopefully the asset does well, might go up, might go down. Hopefully I can find somebody to live in it. There's a lot of hopefullys there, no guarantees. Right. And so with this concept, what I'm doing with it is I tend to cycle both my down payments and my rents through my system. And I'm not going to be one of these people, I don't suspect, that, when you're a real estate investor, this, Glenn, you probably know better than I do, right? There's a lot of people, especially when they get into it, I'm going to buy real estate, I'm going to hold it forever. Like I'm going to die with it, and that is maybe the mentality in your 20s and 30s and 40s. And that's a great, you're in a build mentality. I get that, right?
Yep.
Future you, when you're 60, 65, 70, and you've had 30 or 40 years of the headaches that can be created in real estate because it's not truly passive income, you might have a different perspective, right? So my plan is I've got a system, I've got a lot of policy loans because I've got a lot of assets that those policy loans financed. there's going to be a day where I'm going to divest a component, if not all of my real estate portfolio. Now I've got a place for it, because Nelson's sixth golden rule is leave room for windfalls. Well, the windfalls would be an appreciation of the asset. So now I just put it back into my system by paying off the policy loans. And now what I'm doing, instead of having all the headaches that come with real estate 20, 30 years down the road, I've got a really mature banking system that is primed and ready for passive income time for me.
Real passive income.
Real passive income. And I don't need to worry about the mortgage being paid off or making sure I have a tenant when I'm 65 that's paying the bill, so that's the passive income I'm relying on. I'm relying on the passive income from my banking system. See, I'm leveraging not only my banking system financially, but I'm leveraging Father Time to grow it. So rather than building up all this asset base, divesting myself and starting a banking system when I'm at 55 or 60 or 65, which it's not too late to do that either.
Yes.
But
Yep.
I wanted to use the time from, say age 39, 40 all the way through. And that's how I'm using it. And that's how I that's one way I will teach some of my investor real estate clients.
Yeah. I think the one thing that I think there was a line that somebody said to me that kind of made me switch my thinking around a little bit, was also creating a bridge to my wealth. So like there's a guaranteed amount that's due to my family, and theoretically, the longer I go, the better it'll get. So we want to keep me alive as long as I possibly can. But it's also like I've built this bridge to where I want to be, or at least where, the bare minimum of where I'd want to be.
Right.
So yeah, it's one of those things where I think to myself, it's like, I think Wade Borth says it, he's like, you have to love your family more than you love Wells Fargo. And I think to myself, how do we flow our capital and remain in control of the situation? And the longer we practice the, infinite banking concept, the more efficient it becomes. And also the less risk I have. I'm taking back control over assets, over my cash flow, over the liabilities that I have in my life, and, spreading, and then being able to have a big liquid pool to either take opportunities with or be able to, just sleep better at night, So I think I have this example that I say all the time, but there's a question I always have, or that I would say, if I had the money, I would buy this, or like, for me, it's always real estate. But it depends on the person. Like, where are they going? Like, where are they? Infinite. It's all infinite. Like, what is the thing that's keeping you from getting there? And let's try to figure out how to build that bridge to get there. That's really what we're talking about here.
Yeah. I like to use the word enhancer.
Yeah.
So when people say, like, what is it? And I like to say, well, we'll get into the nuts and bolts of it, but at its core, it's an enhancer. It enhances whatever you're trying to do financially. So it's not getting in the way of that. And I think that's when people first come to it, again, like I say, they're stacking it up like an investment and comparing it. Like, I can do this or I can do this. It's not they don't have the idea that it's an enhancer, that I don't have to pick one or the other. You're not,
Yep.
It's like saying, it'd be like saying, I can invest in real estate or I can open a checking and savings account. Nobody would ever say that.
Yeah.
Ever.
Yeah.
Right?
Yeah.
But that's really what it is when they say I can do infinite banking or I can invest in real estate. It's like saying that about checking and savings. You do both because your money has to reside somewhere.
Yep, definitely. And you have really creating a balance sheet item. We're creating this balance sheet item. It's growing uninterrupted. And when you're ready to take opportunities or take your family on a vacation or buy a vehicle, it's like this balance sheet item is there for you. It never goes down in value, and you're able to utilize it. And the one example, because it's the most recent example I've ran into, is the $50,000 vehicle. I mean, we're not talking about, it's not a cheap vehicle. It's a nice vehicle at $50,000.
Yeah.
So we're not talking about I believe in having a high savings rate.
Yep.
But it gets to a point where you have a family and you need a $50,000 SUV,
Right.
So
let me just say from Canada here, USD. So that's a pricey vehicle.
Yeah. So we're talking in that vehicle, it's $50,000 on today's rates. Would say it's about $900 a month if you're borrowing it from the bank.
Right.
And what you have to make to pay a $900 bill is about $1,400.
Yeah.
So if you think about what we're trying to do, we're trying to recapture this interest. And also, every time you pay this $900 payment, say if you create your own banking system, you're regaining control of $600 to $700 a month at least
Yep.
of your available capital. And while you have this asset in the background growing uninterrupted while recapturing the interest, which that's like the easiest one I can think of. And I think it's like one that a lot of people could relate to. So what are your thoughts on that?
Well, it's great. And I keep coming back to Nelson's book. I wish more practitioners would have Nelson's book out in front more often.
Yeah.
There's a reason why Nelson talks about equipment financing. First off, he was a forester, so that resonated with him. But in the concept of, you got to finance your equipment, you got to finance vehicles. It was a vehicle the vehicle he's talking about. He picks that and he picked the grocery store. They're very relatable, right? People have those things in their lives. They have to, right? And so the cars one or the vehicle one, it's an easy one because most people do in fact drive.
Yep.
And so, it's like you can't shove a whole apple down somebody's throat, right? You got to take it in bites, right? And so those are the easiest bites and they're the ones that most people resonate with. And it's, the reason that we did the webinar on real estate investors the way we did, the comparisons, is because the human mind's always comparing, right? And so for vehicles, when you sit, and we've all built those webinars and those videos about this is how you can do it with, that was, watching one of those was the light bulb moment for me too. Right? Seeing that, right? And how you're paying back the loan and the whole bit, right? And the point being is that most people have bought or financed or leased a vehicle, right?
Yep.
And so they've already done that. They know how to do it. They know how it works. And so when you bring in the way we would do it with IBC, they already have a comparator in their head, right? So I've heard this line before, don't compare me to the almighty, compare me to the alternative, right? And so the problem I think a lot of people approach this with is they're coming in and they're hearing, oh, I got to pay interest on the policy loans, or my cash value doesn't grow, or it's not break even till year number X or whatever it is. And it's like, let's just slow down here. What are you doing right now? What's happening in your checking and savings account?
Yeah.
What are the banks doing for you now? Because you're comparing this to utopia and perfection. Okay. And let's be honest, it's really good, but there's nothing in this life is perfect, right? It's really good. Is it better than what you're doing? And not investing in Bitcoin or real estate or the stock market, that's investment, right? Is it better than your checking and savings account?
Yeah.
And if the answer is yes, why aren't you doing it? Right?
Yeah. That's why I like to being a real estate operator and dealing with banks regularly and with accounting. The balance sheet item is the one that really sticks with me. It's like, and what you think about with the balance sheet item, not all things on the balance sheet are investments. There's cash equivalents, there's debt on the balance sheet. And we also have an estate plan, on our balance sheet. So what are we protecting ourselves from? Not just death, but from the downside? Like, how are we becoming a better operator of our finances and in my opinion, more efficient with our capital,
I mean, that's such an important piece. And I feel like the general public gives it very short shrift, like the estate planning piece.
Yeah.
Most people aren't thinking about it in their 20s and 30s. Heck, probably most people aren't thinking about it in their 40s either, right? That's the best time to do it, of course.
They'll get to it one day.
They'll get to it one day. But, I've reached out to, and particularly entrepreneurs and business owners, because they tend to be in build phase. Like their idea is build just keep building and building and building. And so I've sent a couple messages to some entrepreneurs that are in my orbit that, I had discussions with them maybe 6 months ago, and then they're focused on, it's really busy time with the business and build. And I sent them a message and I figured out how long they were in business for. And I said, you've been building your business now for 10 years. That's about 3,500 days that you've been building your business. Okay. And you're doing a great job, obviously, because you've been in business for 10 years. But what if we just spent one day making sure the distribution of the business, when that day comes, that it's organized and it doesn't tear apart the legacy that you've been building for the last 10 years? Just one day. That usually hits them. I find that usually hits them because they only know how to build.
Yeah.
Right? In distribution and estate protection, they don't know how to do that, but they know it's important. But it's like you got to throw a cold glass of water in their face and say, one day, you've dedicated 3,500 days in 10 years to building this thing. I just want one of your days so we can get this organized.
And I don't know, I mean, I'm sure there might be, but there's many businesses, going through 10 years of business or 20 years of business, there's going to be down years. There's going to be, the expansion years are technically down years because you're reinvesting and you're investing on future income.
Yeah.
And was my experience. I had in 2020, we had 20 units under management. And then by 2022, we had 200 units. And then by 2025, for time frame, we had 650 units. That's like running red hot.
Yeah, you are. That's a red line run.
So what I can tell you, there are some lessons learned, but it's also the one thing I always try to express to people is that you have these life lessons learned and you try to teach other people while you're learning them. And you never want to be the guy that had, $1 million to $3 million business and doesn't have that anymore for reasons of default, or, if you would have just slowed down just a little bit at one point to shore up the foundation, then you could have doubled your size in 2 to 3 years. And my business partner that we talk about it regularly, he's got a fairly large roofing company, and he says there's always an expand and then, focus on operations over and over every other year. It's like they grow, like redline it, and then they focus on operations. And he's like, and it's almost like the year with no growth is the most profitable years because we're focusing on, capital efficiencies, better operations, how not to have employees stealing from you. There's all types of things that happen.
Yep. It's that optimization time, right? Like it's
exactly
growth, and then now our systems need to catch up to the growth, right?
And what better product to have than practicing IBC and having that thing grow along the side of you? It's a very boring asset that I don't need. I'm swinging for the fences in my business. Let's keep everything else pretty calm on the outside.
Well, yeah, and you think of all these people that they're working, whether it's in business or in their job, right? Yep. They're working their tails off and trying to provide for their families and retire in 07, 08. And whether they realized it or not, they were redlining with their investments, right? Oh, the frothy, like you look at the stock market now, are there parallels? That's when a lot of people will rethink their thinking about what they're doing. 2009, 2010, I think there was a lot of people. I know that 2008 was when Jason Lowe got into this.
Yeah.
Right. And you wonder, most of these bull markets last 15, 18 years, right? Well, 2009 to 2026, if my math is right, it's about 17 years.
Yeah.
So I'm not a crystal ball, but there has to be something that is a hedge, like is a baseline. It's on your balance sheet, to use your terminology there, right? It's on your balance sheet, but it's doing a job, and the job is to allow you to sleep well at night, right?
And to allow you to expand when other people are contracting. That everybody talks about it, but what's their plan?
Right.
We talk about cash is trash, but think about what who's the person that you call when there's a deal, the person with money. It's like the person that's going to close, the person that that's like prepared to make sure it happens.
Right. Yeah, absolutely. Absolutely. And it's, I was thinking about this last night. It's kind of both a privilege to do what we do,
yeah,
but it's also a bit of a shame. And by that, I mean, it's privilege because I'm so passionate about this concept and it's such a wonderful concept. But I was just reading a book about different hard money, whether it was Safedina Moose. I like reading about the history of money and money soundness. And Carlos talks about this. Carlos Lara talks about this,
yep,
the soundness of money and the banking cartel. And it's really a shame that so many of us have to even go into these areas of finance and help people grow because they're falling behind because of inflation, because of the Federal Reserve, because of the Bank of Canada, right? Because of these centralized bankers, right? That are causing people to fall further and further behind. And we see it. We see what's going on in our society. And could you imagine all the brain power out there, Glenn, if there weren't people like you and I, that we didn't have to do this because we just had sound money and the value in our, values of exchanges, we maintained it. We didn't have to find all these strategies. you could be out, teaching. You could be working in schools with kids. You could be out, contributing in different ways to society, right? Like I could still be back there practicing law. Like we could have all these people we have different talents and we have different ways of teaching, but we're all in this financial industries world because we have to be, because it's broken, right? And we need to help people. They're busy being nurses and doctors and teachers and engineers, and they can't spend all this time focusing on their money. I mean, we're trying to help them by becoming your own banker and taking control. We need to be those coaches because the money system's broken. And, I just think of how much better of a world it would be if it wasn't broken. And we're trying to do that here. So, and it's like, if we can teach enough people to do this, if we can build the 10% and people really get it, I don't know. It feels like it's a true calling for me, right? It's a true calling.
Awesome. As you were saying that, I was thinking about like this podcast is going to air and we're going to have about 50, maybe 70 people listen to it in the next 30 days.
Okay.
And in my opinion, or what I'd like to think, is really if one person changes something for the better, it's like the podcast. That's the whole reason for this podcast. And I would say that, for other people to see this podcast, we need them to like and subscribe and also comment, ask questions. I'm sure Neil will be seeing them. He'll be able to reach out. Where can people find you, Neil?
Yeah, so I'm at ascendantfinancial.com, and I'm also on Facebook and LinkedIn. But if you go to our webpage, you can connect with me there. Like I said, I'm on Facebook too. But and of course, I'm a listed practitioner under the Nelson Nash Institute as well. I was actually just updating my profile this morning.
Awesome. So what's the name of the webinar that you did with Bankers Vault? What's the name?
Yeah, it's funny. So we do these webinars and then our marketing team tells us, what this is the name of it, right? Okay. So the name of it is How to Fund Real Estate Down Payments Without Draining Your Capital. Okay.
There you go.
And that's sort of our shortened version of it. It's about a 26-minute watch. And we go through the journey of two real estate investors, Jamal and Carl. And it brought me back to like grade 9 science, where you have a control, you always have a control piece, and then you have your experiment, right? And so our control was Carl. He did real estate investing, the traditional way, if I can put it that way. And then we had Jamal, and these guys did, like, whether you can believe this or not, they managed to buy the exact same investments at the exact same time and be the exact same age. So we really wanted to like control all the other variables, right? Same returns, the whole bit. One just used their banking system they built a banking system to fund their deals. That was the only difference.
Awesome. Well, thank you so much, Neil, for being on the show.
Yeah, thanks, Glenn. Thanks so much for having me. It's great to connect with you.
All right.
Thank you for listening to the Capitalizing Your Life podcast. Please rate, like, subscribe, leave a comment, and share with someone who you think would enjoy listening.